Hello and welcome. You're watching Closing Trades on ET Now. Let's take a look at where the market has settled for the last couple of hours of trade. You have good moves coming in, 25,985. Yes, we've slipped below that 26,000 mark from the day's high, but still a 0.5% uptick is something we're holding on to for the Nifty. Sensex too continues to be 0.5% higher at 84,854. Nifty Bank also in tandem with the benchmarks, a 0.5% uptick coming in for the Nifty Bank as well. It's India VIX, that's the counter or the index rather to watch out for, up 4%, so a spike coming in on India VIX today, but nothing to worry about given the kind of move we're seeing in the markets. But how can we not talk about IT giants in today's trade? And that rally is being led by Infosys. Take a look at the stock performance today, a 4.5% uptick coming in on Infosys on the back of the news that the promoters are not going to be participating in the share buyback that has been announced by the company, and that instills confidence amid retail investors about the company's prospects going ahead, and also improves their entitlement ratio, which means the number of shares the retail participants are eligible to provide for buyback. Infosys up 4.5%, HCL Tech up 3.5%, and Shriram Finance also holding up pretty smartly from the Nifty 50 group of stocks, a 2.5% uptick coming in on Shriram Finance as we speak as well. But then the rally continues for IT names, TCS, Wipro, all of them are doing well. From the private banking end of the market, you have Axis Bank and Kotak Mahindra Bank. Both of them are up about 2%. So healthy moves coming in across both of those names as well. What's not doing all that well and is under some pressure today is Eternal, a 2.5% cut coming in. And remember, the stock has been under pressure since its earnings last week. 329 thereabouts is where Eternal has slipped now. Eicher Motors, Bharti Airtel, Ultratech, ICICI Bank, Nestle. These continue to be the top losers. The advanced decline ratio is absolutely even Steven, with slight favor coming in towards the decline. So maybe that is why we've seen the market topple down from the day's high. But still, it's not been that big of a cut because we continue to be around 25,980. If you take a look at some sectoral moves coming in, it's the day of IT stocks through and through. About a 3% intraday uptick coming in on just the Nifty IT index alone. So very strong moves over there. That is being followed by Realty, that continues to see good gains. Phoenix, Brigade, Prestige, DLF, they continue to do well today. PSU banks, Nifty Bank, Metal, FMCG, Media, Energy, Auto and Pharma. That's the pecking order, with Pharma on the flat line. In fact, Pharma could topple into the red anytime now, and that's the take coming in. Rather, that is what the market is looking like. And you know what, since we've heard so much chatter about the way we are inching closer to a trade deal with the US, this fixed group of stocks, they always tend to react when there is a news flow on the trade deal either way. So far, we've seen some negative moves coming in, but take a look at textile and shrimp stocks today. You have Vardhaman Textiles also numbers coming in 8% uptick coming in on that stock on the back of its results, as well as this speculation of the trade deal coming in. Wellspun, Vardhaman, and on the flip side, Avanti, Shrimp, and all of these stocks, Avanti Feeds, they're all doing very well. We also have Kunal in the studio to talk about this. And Kunal, while I understand these stocks are largely based on news flow, what is your take on something like a textile stocks like KPR, Alok, Arvind, Vardhaman? These are stocks we don't talk about very often. But then again, there are certain days where they see some action. Anything that you're covering from this pack?
Yeah, so I think many of these stocks are showing a gap up move. But you know what I also spot over here, Sneh, is that many of these stocks have come back to retrace from their intraday highs. That I believe could be a concern, because you know if these are recovery moves for the stock, then we could be looking at the stock closing at the high point of the day and trying to protect the intraday highs, of course, on the back of higher volumes which are being seen today. So I believe that maybe the markets are looking at this as a little bit of a more speculative kind of a trade as of now. I would actually believe that potentially over the next couple of days, you might see these stocks just about trade into a bit of a consolidative mode. But I think if these stocks manage to hold on to the gap support what they've created today, and this gap doesn't closes for these stocks, say potentially over the next 2 or 3 trading sessions, then we can establish a case that we could be looking at a revival for many of the stocks. And names like Vardhaman Textile, Arvind, Wellspun, Living, etc. I think many of these stocks are exhibiting a very similar kind of a chart pattern, where there is a double bottom of sorts for these stocks after months of these stocks go into a correction. So the potential is there, but I believe that maybe one more level of a confirmation could be something which short-term traders can wait out for.
Okay, so that's your take on textile stocks. Kunal, what about IT? given the kind of move we've seen in IT names today. Anything like an Infosys, it's up 4%. I don't remember the last time we saw an intraday uptick of 4% on Infosys, even despite earnings. No matter what kind of earnings they have been, even in the best of quarters, we've not seen a 4% uptick. So, what are you making of this uptick today for Infosys and also the others that have seen the trickle effect like HCL, Wipro, TCS? How are they shaping up?
So I think the last time we may have seen a 3%, 4% kind of a move for Infosys was on the buyback news for the stock. That was almost like a month back approximately. But then I think this is a stupendous move for the Nifty IT index at large, and of course for the most of the constituents on the IT stocks. Now, talking of the IT index specifically, it's not just a gap up move which you've seen for the IT stocks, but then there are a couple of interesting parameters which you look out for. Almost a month back, when the IT stocks went to that last leg of a corrective phase, you had seen a gap being formed for these IT index. That gap was closer to 36,000 to 5,300 levels. After today's candlestick up move, we've almost entirely filled that gap for the IT index. So that's a very strong indicator that we are looking at negating the entire bearishness or the last leg of bearishness for the IT index. And the second and the most important part, the RSI at current levels for the Nifty IT index is almost perched at a 2 or a 3 month high, I think breaking the July highs for the Nifty IT index. So this also indicates that indicators have started to get back into momentum. Prices should, in an ideal case, follow through. So I think in that sense, I would expect at least another 500 to 700 points rally on the IT index at large over the next couple of trading sessions.
Okay, so that's the view with regard to IT. And Kunal, two financials, Shriram, Axis Bank. Very unlikely, at least in Axis Bank's case, because the last we spoke, you weren't particularly bullish with regard to where Axis Bank is concerned. Give us your take, what's happening there, and has anything changed with regard to the Axis Bank view? And Shriram Finance, this 2.5% move.
So Shriram Finance, we were bullish.
Yes.
In fact, last week I had given a buy call. My expectation was that the stock can't be left behind when you've seen the entire NBFC stroke HFC stocks making a comeback. Today, I think what the stock has done is it's given a dual breakout. We were discussing this is a weekly pattern breakout for Shriram Finance, a daily pattern breakout, but that's now engulfed into a weekly pattern breakout. So if the stock sustains, say tomorrow, which is the weekend, the last day of the week, if it closes above the 700 mark, then we could be looking at a much more bigger target for Shriram Finance, maybe in the range of 740 to 760 over the next maybe few odd weeks. So I think that's another trade to look out for. Axis Bank, I think, is a classical chart. There was this period where the stock had gained, I think, 8 or 9 days consecutively in September, somewhere or mid part of the September month. From there on, the stock has gone through a second level of an up move. It's crossed the 1250, 1260 barrier today. An excellent uptake for Axis Bank. Yes, a little bit unanticipated given the context of the markets where we are. But I believe that, of course, markets can take it with both hands.
16% move from July, or rather from even the beginning of September. That's a phenomenal move where Axis Bank is concerned. Okay. All right. What we'll do is we'll slip in a very short break. And on the other side, we'll... Okay. Before that. Okay. Kunal, stock ideas.
So I'll go with a few buy calls. The first one is about Ujjivan Small Finance Bank, and I think after quite some time the stock is making a very strong comeback, breaking the levels of 50. So we'd look out for 55 as a target. Stop loss at 50 for Ujjivan Small Finance Bank. And the second would be something which we've been discussing over the last 1 month. Vodafone Idea, still at current levels of 9.5. It looks extremely attractive. I sense that the stock is going through a second level of a strong breakout on the upside further, and of course the volumes in this leg of up have been phenomenally on the higher side. So we look out for 10.5 as now the revised target, and stop loss could be tail to 9.
Okay, Vodafone Idea making it to anybody's buy list after a very long time, so that's interesting to see that. And Ujjivan Small Finance Bank, these are two of Kunal's picks. On that note, we'll slip into a very short break. Now on the other side of the break, we'll interact with Manav Chopra, the ED at Nuvama Institutional Equities, on all things.
Welcome back, and now we're tuning into a special conversation which we have scheduled, long awaited. Manav Chopra here, ED at Nuvama Institutional Equities, here to talk to us about his latest thesis with regard to how EMs are placed relative to India now going forward, and how maybe the US markets are placed relative to EMs as well. So Manav, let me throw the floor open. Let me first allow you to tell us what the thesis is or surrounds. You seem to be suggesting that EMs will likely underperform India, and within the global marketplace, US will underperform EMs as well. So EMs is where some of the outperformance will lie, and within EMs as well, India will outperform. Give us the sense as to why.
Yeah, thanks for having me, Harsh. Wish you all a very happy Diwali. Firstly, the market construct has been such that the Indian markets have been in a sideways consolidation. I would say a healthy consolidation in last 15 to 18 months, and we've seen this scenarios happen in last 15 years. This is the fourth time it has happened, but largely when we are taking a little bit of a macro perspective. When we are looking a lot of things in play, especially how the emerging markets are shaping out, especially a larger breakout in Shanghai after 10 years. Taiwan is getting into a bull market after 30 years. It has been in a bull market in last 2 years odd. And the construct of the emerging market still suggests a 25% upside even from the current levels. So when we are taking a ratio of the US markets with the emerging markets, the ratio has actually seen a breakdown, which indicates a preemptive thoughts of where the US is likely to underperform the emerging markets. And broadly speaking, the Nifty ratio versus Shanghai and the Nifty ratio versus emerging markets are all at an inflection point. We have seen how our markets have relatively been an underperformer on the emerging market front and also versus the US market. But I think that scenario is also largely coming to an end. A lot of foreign institutions have been underweight India since a while now, and the way Indian markets are now trying to stage the breakout, I think the larger context remains for a strong catch-up rally, which will eventually start to play. And we've seen how the short squeeze by the FIs are currently driving it higher. So our base case is that the emerging markets will do very good for at least a couple of years from here, and out of which India will definitely see a strong catch up, as it has been a very strong underperformer, and the inflection point is indicating to for a larger upside play. Few of the data sets which are further validating our scenario is one is the US 10-year yields, which is kind of cooling off from its highs, even though largely we have seen how the 10-year yields across the globe has been higher for a while, but the 10-year US 10-year yields coming off, and with the dollar index also slightly being on the bearish side, definitely these two combination is likely to see a strong fuel of liquidity continue in the emerging markets. So that's why we are quite bullish in that scenarios, and which is going to be very promising for the Indian markets also.
Manav, before I get to Indian markets and probably quiz you on that, and viewers, for perspective, Manav has got a couple of really good calls all through this year, and especially on the metal side, where at the start of this year, when I spoke with him, he spoke about how there could be a 30% rally in metals, and that's exactly what's playing out in the calendar year. In fact, metals have outperformed every other sector. So we've seen that. But Manav, give us a sense on whether you do have a call on gold or silver, if at all, because the kind of rally that we've seen, before I come back to Indian markets, and maybe Snake can take a question there, but give us a sense, gold, silver, do you have a view?
Yes, so we have been very largely strong bullish on silver for a longer period of time. My base case is that the silver has actually kind of witnessing some bit of a breakout of its very long resistance line of 25 years. Largely speaking, we are recommending some partial profit here, but continue to ride the rally because the risk on scenario, at least on the emerging market and especially silver, which is likely to move higher from here, will continue to be a kind of a scenario which will do better. But we don't expect a very strong upsurge in gold from the current levels. Silver will outperform gold, but the equities in general will be the play to look at. So for us, the medium term upside for the silver is closer to 55, 56. But eventually, if that starts to break on long-term charts, I think keeping a number would be reasonably unjustified. We are recommending our clients to ride on silver, but take some partial profits and take on with some equities even at the current levels.
Okay, so that's your play on precious metals and not expecting much upside on gold right now. Manav, hi, this is Nehi also joining in. Let's focus on the Indian market now. On the charts, where do you see the Indian markets headed given the way we started strongly today? We fizzled out slightly from there, and especially on the SMIDs end of the basket. Do you believe they now have what it takes to outperform the large caps?
Yes, absolutely. So when we are looking at the medium term, long term perspective, yes, we do expect a strong catch up coming from the mid cap space. Small caps haven't done really that well, but we do expect after a sideways consolidation, small cap also to witness that breakout and outperformance to come in. But the current construct of the market remains that we have an upside base case of 27,500 for the Nifty. In that case, obviously, there are few sectors that we are very strongly bullish. We maintain a bullish bias, definitely starting with metals. The way the emerging markets are likely to see an upside of 25%. So metals is something which will continue to do rally from there. And we are very, very bullish on metals, at least even from the current levels, another 20% upside, which cannot be ruled out because that is the upper end of the channel of its long-term channel, which is roughly to 13,000 levels on the metal index. Currently, metal index is roughly around sub 10,000 levels, but we expect this consolidation and then larger breakout to play. From the large cap space, I think the BFSI as a space will do very good. We are very bullish on the PSU banks, along with the NBFCs and the capital markets. So these are the few layers of the markets which we are very bullish on. And on the SMID side, coming on the SMID side, I think the infra is going to be another leg of a fresh momentum breakout, which we are anticipating. And I think it's going to be a proper beta play going forward for next 3 to 6 months.
And Manav, your top plays within, say, PSU banks, let me start with that.
Yes, from the PSUs, Harsh, we have now witnessed that the PSU banks are kind of coming to its previous all-time highs. Very constructive of one perspective that the PSU banks will definitely outperform the private banks going 6 to 12 months down the line. Even though there are few private banks have seen some bit of a momentum breakout, but the larger construct of the PSU banks is far superior. From within the PSU banks, very bullish on names like PNB, Canara Bank. We have a base case upside of 30% even from the current level. The PSU Bank Index, which is currently placed roughly at sub 7,800 levels, I think the larger perspective targets that we are looking is closer to 9,500, even 10,000 levels. So for us, the PNB, our upside closer would be 145, 150, and Canara Bank northwards of 150 plus. So there is a reasonable strong setup that we are witnessing in the PSU banks, and also with some bit of a cool off in the Indian 10-year yield, I think we will be seeing a strong upsurge coming into as a strong tailwind for the PSU banks in the near term.
Okay, so that's your take on PSU banks. But Manav, what about industrials? From what I understand, you've been bullish on the sector. You've liked that. So any particular plays within industrials?
Fair. So see, from the infra sector specifically, I would prefer to pick the non-conventional play at the moment. We have recommended medium-term upside bullish stance on Adani Ports. We have seen how Larsen has seen a massive breakout from its weekly and monthly resistance, and usually, these are very strong setups which are further confirming for the larger upside coming in. GMR Airport is also one of a very strong consolidation which we are witnessing into this stock. So largely within the, I would say within the infra packs, more constructive on these three names. The infra packs also constitutes of the cements and the OMCs, but I think they are more or less consolidating. But this is where the real trend and the momentum would be seen, possibly on the upside. So I will not be surprised to see a name like Adani Ports could be seeing levels of closer to 1800 plus. These are some Nifty 50 names which rallies of 20-30% could be definitely very meaningful, even though they are not very highly weighted on the Nifty besides Larsen. But yes, they are very strong constitutes when it comes for a stronger play. Even GMR Airport, we've seen very strong accumulation happen over the period of time. So we are quite constructive on the infra space. I think this is this is one of the sectors which have not really outperformed in the past few months. They have just started to gauge its upside base formation, but there is far more upside that we see could be played in next 3 to 6 months.
Manav, what about your pick, which is metals? Now you've already seen a very good rally. What are your top picks within that space, and what can we expect going forward? What are the kind of returns? And we've spoken about this last time we spoke as well. And you were bullish, but is there a number? Because when I spoke to you at the start of the year, you said 30%, which is nearly now played out. So trying to understand what the upside from here is.
Absolutely. So Harsh, our early thoughts was, the emerging markets will definitely come back very strongly, and the kind of commodity cycle play, especially along with China, I think the only way to play India would be through metals. I think that part has started to play very well, and now we are seeing a lot of puzzle coming back into the space. Like I mentioned, the metal index, which is roughly at closer to 10,000 levels. In over the period of longer term, we expect it to go closer to 13,000 and even 14,000, which is a very strong upside. So the best play within the metals, we are still recommending as a strong buy on dips would be Tata Steel. I will not be surprised to see if Tata Steel from here also sees an northward of 40%, because that's the best play within the large caps. For this stock to go towards 250, 300, there are strong setups which are likely to play out. And also when we're looking at the international steel prices, there are some uptick happening on that side. So I think the tailwind also from the international commodities will just flare it on the upside. So we remain very constructive. I think the base case of metal index coming closer to its previous all-time highs has played out, but the momentum, or I would say the larger upside swing, is yet to be seen. So definitely stay on with this. Tata Steel remains one of our top bets from the large caps. And from the mid cap space, very constructive on names like Jindal Steel and Power, but that is yet to see that kind of a confirmation and upside. But we are very constructive on the metal as a theme for a medium term, long term, even from the current levels.
Okay, so that conviction on metal continues. Manav, appreciate you joining us, and good conversation. But yes, and also hoping to catch up with you once again and many more times on the channel going ahead. Thanks for your time today. Okay, let's shift focus and talk about the stock of the hour, if you could call it that. Based on its earnings, it's HUL. That stock spiked when the numbers came out, but as and when we started getting more details about volume and segmental performance, that has been largely mixed at best. The stock took a little bit of a dip, continues to trade in the green, but not as high as the 2% surge that we saw when the numbers did come out. In fact, revenue also has seen an uptick which is in line with our estimates. You have PAT, EBITDA and EBITDA margins that have done well. EBITDA margins continue to be in the range that was guided by the management earlier, between 22 and 23%, on the upper end of that guidance. So looking very good on that front as well. If you take a look at what the overall numbers have been, underlying volume growth has been absolutely flat. We were expecting between 2 and 3% of growth, so that's a big miss coming in. Underlying sales growth has been 2%, in line with what the street was estimating, and the interim dividend announced has been 19 rupees per share. Home care revenue has been a little bit of a miss. Beauty and well-being has surprised on the flip side. Good numbers coming in over here. Although volume growth continues to be flat. For personal care, revenue is up about 0.5%. Foods also revenue up 2.7%, but there's been a high single-digit decline in the volumes for personal care, so that segment has lagged behind. In fact, I caught up with the management too earlier in the day at their headquarters, in terms of what the margin outlook is about GST rationalization, the normalization on that front, and where they see volumes headed. But it's an interesting conversation I had with them about margins. Let's go across and listen into that snippet.
The work on overall work we've done in the portfolio, transformation, the 4 key priorities, improving macro conditions, and GST transition, which will start getting stabilized from early November onwards. We do expect our second half of the financial year to be better than the first half of financial year. And our focus will be squarely on volume-led growth.
Right. Priya, your strategy on the personal care segment, we've seen a high single-digit decline in volumes this time, but what's done well is premium soaps. Now with palm oil also on the deflationary curve, any improvement, any expectation of volume improvement going ahead for your personal care segment?
Yeah, I think when you look at our personal care business, we're very pleased with the competitiveness of our personal care segment improving. This is very critical to us. What augurs well is the double-digit growth that we've seen on premium soaps. This will continue to be an area of focus for us, including body wash. Today, body wash market in India is highly under-penetrated. It's under 2% penetration, and developing the market here will be key to our strategy on personal care.
And Ritesh, your outlook on margins, this time 23.2, slightly above that guided range of 22 to 23%. Are you comfortable being in that segment, or are you impacting some improvement on account of GST, and would you like to go up a little higher?
So if you look at our first half margin for the last 2 quarters put together, it's 23%. It's at the upper end of the range we had spoken
Yes.
about. Going forward, we expect this to be maintained at these levels. What you will see, the headline number will change once we finish the demerge of ice cream. You will see this number improving. And on an annual basis, we have 50 to 60 BPS benefit of margin coming in once ice cream gets demerged. September quarter, December quarter also non-season for ice cream, which means the impact is a little more than that. So subject to adjustment from ice cream, our margin levels will be maintained at the current levels.
Okay, so that's the take coming in from an HUL. And results today, stock not doing much, 1% or so higher in trade. So nothing to complain about, 2600 on an HUL. But joining us at this hour, Arpit Beriwal, manager at and derivatives analyst, beg your pardon, equity research at Motilal Oswal Financial Services. Great having you here, Arpit. Let me first start off by taking your view with regard to some of these consumption names, especially HUL in particular. Give us a sense, what's your take at this point on charts, and what are the levels you're looking out for?
Very good afternoon. Thank you for having me. So if you talk about the particularly FMCG stocks and HUL particularly, it has been a huge underperformer in last couple of quarters. And if I look at the weekly setup also, definitely it has been consolidating from last couple of weeks between 2400 to 2700 is a broader range. On the immediate basis, support is seen around 2550 levels, whereas upside 2650 2680 is the hurdle zone. So overall, a stance of the overall FMCG index is the underperform is likely to continue. And looking at the current setup also, definitely it's likely to consolidate between 2550 to 2700 zones. So overall sideways to consolidative bias in HUL going forward.
Do you have a view with regard to HUL?
So I think like what we were discussing in the morning, I think this is a good candidate for buying on dips rather than buying this on momentum. Because for the last 4 years, you'll be surprised that the stock is stuck in an 800-point range.
Sure.
Now 800-point can look at 40. You can look at this as a 30% or 35% kind of a return for the stock. But then for 4 years, the stock is stuck into this 800-point return, 800-point range with. So I think that's the trick over here for HUL. So I think in that sense, I believe that buying this closer to that 2,300 mark, 350 levels is a good strategy for the stock price for traders and investors who have a medium-term time frame. Otherwise, I think as a momentum play, I think the stock has already done up 7-8% pre the result or in the anticipation of the results. So that pre-result trade for HUL is also out. So I think in that sense, I would not initiate a buy at current levels.
Okay, not initiating a buy over there, Kunal, on HUL, but somewhere where we have certainty now. For example, a Nestle, wherein the numbers came last week and strong numbers. The stock also did very well after the numbers came out. At least for the near term, let's say till the next quarter, now that we at least have some surety about the quarter gone by, would you still be a buyer on Nestle now? Would be a good time?
Yeah, so Nestle is a different chart altogether. The stock has already confirmed a new high for itself. I think at least a 52-week high, if I am not wrong. Breaking past about the levels of early levels of 1200, 1220. So and the way in which the stock has given a price volume breakout, the last 4 or 5 trading sessions or broadly 1 week, the stock has run up more than 10 to 12%. That tells you that the eagerness of buyers is on the much higher side for a stock like Nestle. So that I believe could be a good candidate. Even on the short-term charts, like for example today the stock is down 30-40 points from the previous highs of 1300 levels thereabouts for Nestle. So that makes a trade a little bit more attractive in terms of risk reward. So even if you're not buying the entire quantity at current levels, I think starting to buy at current levels for Nestle could be a better strategy.
Okay, so that's the take coming in with regard to some of those FMCG names. A couple of other big buzzers today, Kunal. Something like an MTAR Tech within the defense pack, 6.5% higher. And then you have some of those textile plays. Let me first come to MTAR and within defense, anything that you're liking?
So MTAR itself is a very good chart, Harsh, because the last 2 months from 1400 the stock had gone up to 2200 or 2300 where it's trading right now. It's an exceptional last 2 months of up move. This negates almost 2 years or maybe 1.5 years of a major underperformance for MTAR Tech. And I think I remember at that point of time also in 2024 start, there was this major rally which was going on for many of the defense stocks where the stocks were showing exceptional returns. Both the larger cap names like BEL, HAL or even the other shipyard names. So I think in that sense, MTAR Tech is covering up for a major underperformance on a time-wise basis. I believe that the stock should be good for at least another 200 to 250 points on the upside further, trying to challenge back towards its 2023 highs at 2000, I think 400 to 2600 range. So it's a strong chart on the monthly basis. So with a time frame of another 3 to 5 months, I would look at 2400 to 600 as a target range.
Okay, so that's a range on MTAR Tech, and strong outperformance is what Kunal is expecting on the charts going ahead. But I can't help but draw our attention once again back to Infosys. Look at the move we've seen on that chart today, up about 4.5% as we speak, and that stock is on a tear after promoters, including Nandan Nilekani and Sudha Murthy, they have said that they are not participating in that 18,000 crore share buyback that the company recently announced. Now, this in turn is instilling confidence in the company's growth outlook and is also improving retail investor entitlement ratio. Kanishka is joining us with the details and what has led to this upsurge in the stock today. Kanishka.
Well, Infosys shares in the spotlight today, surging nearly 5% and emerging as the top Nifty gainer, helping lift the Nifty IT index also nearly 2.5% today. Now, this rally came after promoters including Nandan Nilekani and Sudha Murthy, they have said that they will not participate in the company's 18,000 crore rupees share buyback. Now remember, promoters currently hold about 13.05% of Infosys equity. The buyback involves 10 crore shares, that's around 2.4% of the total equity, priced at 1,800 rupees per share, which makes it Infosys' largest ever buyback. Now, this decision by promoters to not participate is being seen as a strong vote of confidence in the company's growth outlook and also improves the entitlement ratio for retail investors. Now, this move aligns with Infosys' long-term capital allocation policy of returning around 85% of free cash flow to shareholders through dividends and buybacks. So, yes, Infosys in focus on the back of that.
Infosys in focus in the back of all of these reasons, stock up about 4.3% as we speak. But on that note, we'll slip into a very short break, and on the other side, keep the conversation going with our market experts and our tech.
Welcome back, and we're coming out at you from the SBI Live studio here. Thanks for staying with us here on ET Now. Let's go across. Arpit's still with us. Arpit, some of these textile stocks buzzing. And you've got Arvind, you've got Pearl Global, you've got KPR Mill, some of those really moving in trade. We did take Kunal's view, but let us have your view. What do you make of the move? Is there more juice left in this one? Would you play a trade?
Looking at the overall textile stocks, if we see overall setup wise, such stocks have been quite selective. So whenever there's some news, definitely the stocks see some sharp uptick, and post that overall, if we see the stocks tend to consolidate. However, selective stocks have still good structure, and if you look at the chart structure of particularly KPR Mill or Welspun Living. So first, if you talk about the chart structure of KPR Mill, the stock overall on the monthly time frame is in uptrend. It is consolidating on the monthly time frame from couple of months, but the good base from near 1,000 levels. So I think positionally, I think from here on, if one wants to bet positionally, the stock can see a steady move towards 150, 1200 levels positionally. So I think KPR Mill looks good from positional perspective. Along with the second would be from the similar space is Welspun Living. So today the stock is already up by 6%, but definitely on the monthly time frame, a good base formation is seen between 120 to 130 levels. And I think look in the chart setup wise, it's on the verge of surpassing this 50 VEMA on the weekly time frame. So risk reward looks quite favorable. The stock can head towards 135, 145 in short term. So Welspun Living and KPR Mill looks good from a positional perspective in this space.
Okay. Kunal, wanted to shift focus and talk to you about the top Nifty loser today. Eternal, a 3% cut, slightly more than that coming in on the stock today. And the stock has been in pressure ever since we've seen these earnings come out. You know, the beginning of the show also was highlighting the cut on Eternal, but it was about 2.5%, and that has intensified by another percent as we inch towards market close. Your take on Eternal, Kunal? And in fact, two questions on Eternal for you. What should someone who holds Eternal right now do, given the stock has been correcting? And second, is now a good time for someone who doesn't have exposure to the stock to enter, given that it has fallen?
So for the first one, of course, hold is the criteria.
Okay.
And assuming that you've purchased at a lower level for Eternal, then of course I think the stock still seems to be into a very strong uptrend. It was just that over the last 7 or 8 months, it was consecutive upside for Eternal, so it maybe wanted for some sort of a cool off. I wouldn't be surprised that the stock actually goes into maybe a time-wise correction over here for the next couple of months. So just about trying to establish a range for itself. So I think after that result day up move, we are looking at broadly 350, 360 as a resistance on the upside. So far, the stock has cooled off to 327 mark, but I believe maybe on the downside, it could retest levels of 315 to 320 range. So it's just trying to establish a fresh range of a 10% for eternal 350 and 315 on the downs, 350 on the upside and 315, 320 on the downside. But I believe that for someone who's looking to buy the stock, then I believe that this 315, 320 dip could be a good starting point for traders who missed out on the stock earlier. Because when you see stocks which are into a very strong major multi-year uptrend, they hardly go into those phases where these stocks correct by 10-15%. So I think Eternal is going through that phase right now. One should try and take advantage of that.
Okay, so Eternal is the stock which Kunal is speaking about with regard to his views. Longer term uptrend continues unabated according to Kunal. So continue to hold this one. No fresh buys is at least the sense for the moment in the near term. Let's talk more to and tilt our conversation towards the fundamental side of things. And Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital, joining us this afternoon. Sudeep, great chatting with you always. Wishing you a very happy Diwali and hope you have a great new year ahead. But talk to us a little bit about Eternal. What's the view coming in there? This little bit of a dip that we've seen in the stock price, where we've seen the stock price fall from 360 odd to around 330, sub 330 levels. Good time to maybe buy the dip, or would you wait and hold out?
Well, Asha, it's like this. If you are a long-term investor, you are looking at the Indian opportunity. I think Eternal definitely is a long-term buy. The strategy which they have adopted is definitely tilted towards growth. That's the reason why they have been actually repeatedly coming and making a statement that immediate profit and profitability is not their sole objective. They rather focus on growth, and which is exactly what they're doing. If you look at their last quarterly numbers which they came up with, I think again the focus was on growth very clearly. The profitability has taken a beating. But in this kind of a business where there is always a propensity for the winner to take it all, I think it's very important that they stay ahead, both in Blinkit as well as the food delivery business. And I think pretty much that's what they're trying to ensure. There is competition from Zepto, Swiggy, and Instamart, obviously Swiggy's and others. So they have to ensure that they garner larger and larger volume and market share, which is exactly what they're doing. So if I have to believe in India growth story and the platform play of e-commerce and quick commerce business, particularly quick commerce and food delivery, I think Eternal will be my bet from a long-term perspective. But don't buy it with a very short-term objective because you may not get the desired returns.
Okay, that's on Eternal. But Sudeep, any particular outlook on Swiggy, given that we've not chatted about that stock in a while, and we don't have the numbers for this quarter, but for Eternal we do, and there were largely a mixed set of numbers coming in. Do you believe in the near term at least Swiggy could outperform Eternal, while Eternal could be a better longer term holding?
Well, my view is if you have to buy a company in this sector, you should go for Eternal. Because as I was mentioning, this is a business where the winner takes it all. And if you really look at the quick commerce segment, which both Eternal as well as Swiggy has, I think Blinkit is way ahead of Instamart, of Swiggy. Zepto is breathing down their neck, and I think they are ahead of Instamart at this stage. So the pecking order is Blinkit, Zepto, and then Instamart. So competition-wise also, I think Eternal has doubled down on expansion and growth. So I would rather go for Eternal and avoid Swiggy at this stage.
Stay away from Swiggy, go for Eternal. Sudeep, what do you make of this strong rally that we've seen with regard to IT today? Do you believe that some of the fears with regard to tariffs ebbing away could well lead to a larger IT rally? Is that at all likely in your opinion?
Well, I think today's rally, Asha, has got to do with better than expected results, generally from the IT biggies. Also, the H-1B visa tweaking, which has been done, or at least the clarification which has come from the US authorities, definitely suits the Indian IT companies who plan to hire in the near future in US. They don't have to pay the incremental $100,000 for people for hiring resources who are already in US, and that's a relief to an extent. So I think these have led to the rally or kind of a mild rally, I would say, in the IT stocks at this stage. But I think the fundamental concerns haven't yet gone away. So I don't think I will venture to start buying IT companies at this stage. I'll wait and watch. I think this rally is a welcome relief for the investors in this segment. But I think there are many more challenges in the near future for the IT companies to overcome before we can say that they have moved from kind of a single-digit growth to a double-digit growth. As things stand now, the forecast is for kind of a low single-digit growth for the IT biggies.
That's the outlook coming in on Nifty IT and some of the IT stocks. But as we slip into a very short break, let's revisit the segment at ET Now at Ground Zero, where my colleague Harsh caught up with Cochin Shipyard's Chairman and Managing Director Madhu S. Nair on their financial ambitions, targets and efforts in supporting India's maritime goals. Let's go across and listen in, and let's slip into a very short break after that.
What we are guided is another 5-6 years down the line, we will be about 11, 12-ish. This is what we have said. And we would be happy to stay within a PAT margin of around 15%. Classically, if you just look at just the merchant vessel building, large shipbuilding groups worldwide, whose turnover levels would be much higher. It could be anywhere between $5 billion to $10, $12 billion kind of a thing. The margins are much lower, because this is a slightly different, it's more of an EPC nature of business.
Sure.
Our margins are a notch higher because we are in a mixed set of industry. We have the merchant vessels, we have the specialized vessels, we have ship repair, we have commercial, and we have defense. So we are not exactly the same as what you see as some of those large companies.
Hi there, welcome back. You're watching ET Now. This is Closing Trades, and thanks so much for staying tuned with us. Now, the big story of the day is the kind of spike we've seen in crude prices. Of course, the entire conversation is centered around what happens in terms of the US sanction that they've put on Russia, how Russia reacts to that, and finally, what is India's stance when it comes to buying Russian oil. But the government is also keeping a vigil on the impact of US sanctions on two Russian oil companies. Will the Indian OMCs be hit? Let's take it across to my colleague Prakash to know what the sources are telling your channel. Prakash.
That's an important development coming in, as the government sources are indicating that they're keeping a close watch on the developments. In fact, the oil ministry is still reviewing the impact with the oil marketing companies. However, they have confirmed that the major impact unlikely on OMC's crude supply, as minuscule volume of OMC's oil purchases made from Rosneft. In fact, OMCs largely make purchases through intermediaries, and therefore sanctions impact on OMCs is limited. Sources also suggest that the OMCs take decision based on market dynamics. As far as Russian crude is concerned, discounts have reduced significantly, and the oil marketing companies will be taking decision based on their business viability. There is no dearth of oil supply in the market. There is ample supply in the market to cater demand. And India has successfully diversified its import basket to 40 countries. Government sources have reiterated that India will protect the interest of consumers and keep energy security as a top priority.
Okay, and thank you so much for that, Prakash. For joining us at this hour, Rajesh Bhosle, technical analyst at Angel One, also joining in this afternoon. Rajesh, let me start off with some of these OMC companies and some of these OMC names. Well, we have a packed house here. Give us a sense on what you make in terms of a view with regard to how OMCs have moved and whether there is still some bit of move, at least on charts left, before I go across to Sudeep and take his view with regard to fundamentals.
Yeah, hi, afternoon. So if you see all the three major companies, IOC, HPCL, BPCL, they already had a strong move. And today somewhere we are seeing some reversal signs or some kind of profit booking. If you see IOC, HPCL, they are trading below its recent intraday supports and also below 20 EMA. So we are expecting that some kind of profit booking can extend in the near term. And as compared to that, we are bullish on the ONGC. So ONGC has been in a consolidation phase, but it has now crossed its July swing high. And possibly there can be a positive traction in the ONGC extending towards the 260 level. So IOC, HPCL, BPCL can see some profit booking, whereas ONGC can see some further extension of upside.
Okay. And Sudeep, with regard to some of these OMC names, classic dividend plays, of course, but if there is the risk of crude spiking, that could well vanish very, very quickly. So how are you looking at the risk reward here?
Well, you're absolutely right. I think you have to remember that we are heading into a state election. So it's extremely unlikely that there will be increase in any prices in the pump level. Under the circumstances, the moment the crude oil spikes, these marketing companies will take a hit in their profitability. I'm not saying they will be having a problem as far as profitability is concerned at a unit level as well, but definitely the profitability will take a hit. So the circumstances which are building up that crude oil prices may go up doesn't augur well for the oil marketing companies. So I will be a little careful as far as oil marketing companies are concerned. And I agree with the technical analysis. Fundamentally, also, I think it's better to play through the generating companies, oil generating companies, which is oil producing companies rather. So ONGC can definitely be looked at current levels. Even otherwise, I think from a long-term perspective, ONGC does look good, considering the fact that oil is becoming extremely important. And at some level, ONGC deserves a re-rating.
Labs come out with numbers. 35% growth looks slightly above what most were penciling in. That EBITDA number also looking quite good in comparison to what analysts were penciling in. So that number looking much better. But 0.7% higher. Stock cooling off a little bit from the highs of the day. But we'll wait and watch on that margin number, because that will be crucial to understand as to how this one has played out. Kunal, Laurus on your list at all? Would it interest you? And if not, what within the pharma basket?
Yeah, it's done reasonably well. In fact,
Yes.
Laurus Labs, I remember, I think, tracking the stock when it was almost at 450, 500, start of this year or maybe end of the previous year. And
Yes.
from there, the stock has done exceptionally well. So I think in that context, yes, the stock has done fairly well. But then trying to put this into context with many of the other pharma stocks, the stock stands out, to be a strong outperformer with respect to most of the other stocks in the pharma pack. So I think solitary for Laurus Lab, we may probably expect the stock to continue to move up higher on the upside. The support with the stock is established in the last 2 months of this price range and then a breakout, I think is closer to 850, 860 mark. So maybe that could be kept as a positional based stop loss for traders who are looking at a buy.
Sudeep, do you have a view, Laurus Labs?
Well, I think, as far as pharma companies are concerned, I'm a little cautious. But having said that, the way things are developing in US and US-India trade relations and overall pharma scenario as far as US tariffs are concerned, I'm less concerned compared to what I was earlier. I think the pharma companies will avoid the bullet at this stage. And Laurus definitely, based on performance, do look good.
Okay, so that's the take on Laurus Labs. You were awaiting that margin number and we have clarity there. Consolidated EBITDA margin has come in at 24.4% compared to 14.6%. It's almost, it's a crazy uptick that we're seeing on the margin front as well. The stock is reacting to that. Yes, a 1% uptick coming in on the stock. That little dip that we saw after the initial numbers, it seems like that's being bought into right now. And an uptick, once again, is something that we're seeing on Laurus Labs. But Sudeep continues to be cautious on pharma. Arpit, what about your take on the overall healthcare space? Hospitals, diagnostics, anything that's looking attractive from there?
If you look at the overall healthcare space, so definitely our prior pick was Fortis and Max Healthcare. That used to be our prime stocks to look out for. However, in last couple of days, definitely the stock, if you talk about Fortis, particularly, the stock is in strong uptrend from almost July series to the stock is moving one way from 700 to almost 1100 levels. Last couple of days, the stock has corrected marginal from high levels, but looking at the bigger time frame structure, definitely any dip towards 980, 990 would be again a buying zone for this counter. So Fortis would be a preferred pick within the healthcare space. It's in clean uptrend and it's kind of a classical buy on dips counter. And if you look at the daily scale also, its stock is perfectly holding about its 50 DEMA. So that is a good entry point around 1000 levels. So that stock can be added near around 1000 levels. We're keeping stop loss of 960 for an upside move towards 1100 and then positionally 1200 plus.
Okay, Rajesh, now, within the universe, outside of IT and private banks, I think everything has been sold into to a large extent. In fact, the Nifty is now flatlining. Let's pull up the Nifty 50 and it's looking like a day where we're increasingly going to, it's the Nifty 50, that's the, okay, can I have the intraday? There you go. So it's flatlining as we speak. So zero returns in terms of all of the moves that we made today morning has been sold into. Rajesh, do you have a view on the Nifty itself now? 26K breach today, but very, very briefly, we've virtually pulled back from that level. Now we're below 25,900. What are the levels you're looking at?
So if we see from the start of the October month itself, we had a strong rally, and it's like a sell on news kind of thing. The things that have happened in the last couple of days, it was already discounted, and post that after a gap up, markets are not sustaining at higher levels. Having said that, we are seeing a long consolidation breakout after more than 1 year. So any dip towards the June swing high somewhere around 25,700 would be a buying approach. We expect Nifty to retest its all-time high somewhere around 26,300. So buy on dip would be what we are expecting in the near term.
Kunal, Nifty?
Yeah, so I think this could be a normal routine profit booking which would be happening just to try and protect that 26,000 mark. From an option writing perspective, we need to see how the the index sustains if it happens in the next couple of days above the 26,000 mark. This also tells you that the markets were getting a little bit more frothy after this 1500-point rally. So we started off the October month at 24,500 thereabouts, and we are almost at 26,000 mark. So after a 1500-point rally, there's bound to be a point where the index consolidates. But generally we've seen historically that whenever the index consolidates after the initial move is led by large caps, that consolidation opens up mid caps and small caps outperformance. So maybe this could be a healthy consolidation where the index may just about gradually trade into a range or a band over here, but then the market breadth will start to open up. I think that's typically what happens when sentiment remains to be bullish, but large caps generally dominate the first leg of up move.
So it's largely one door closes, another opens kind of a
Yeah,
situation
multiple
for the
doors
market.
open
Multiple
up.
doors
So you'll have to
open up.
change your trading style. You'll have to look at the kind
Sure.
of picks which you pick at current levels.
But Kunal, what does this tell you about the confidence in the market right now? The day we breached 26,000, it's all sold into. Is that an indication about the kind of confidence levels we're seeing in the market right now?
No, I'll not look at it this way, Sneha. So look at it this way, that traders who've been riding this point for the last 1,500 points for the index, there's bound to be some point where you will try and take out profits from large cap names and then shift towards the mid cap stocks. You look at the intraday correction, I think more or less, I think it's ICICI Bank which has gone through a sharp correction.
Yeah.
Some retracement which has happened for HDFC Bank and Reliance Industries. But then you look at the new set of large cap stocks which have participated. SBI is almost at its new high. L&T has come back to almost very close to breaking that 4,000 mark. So you have slew of large cap stocks which are outperforming and showing signs of a potential breakout. Index at the end of the day is a mirror of what happens to its Nifty 50 constituents.
Correct.
Right? Nifty by itself may not have a buy on the spot levels. But then if the components of the Nifty stocks, the larger cap names, if they come back towards a 52-week high, it's a matter of time that the Nifty replicates that kind of a trend. So I think in that context, the trend is set on the upside. It was just that we were going through a little bit of a froth over here. That froth should now ebb off.
And therefore, what are your picks in this market, Kunal? I know a couple of back-to-back questions, but give us your picks. Give us a sense.
So I think Vodafone Idea is something which I had highlighted. Yes. That's something which looks attractive. As I said, you might have to change the style in terms of trying to pick the trades over here, not focusing too much on large cap names, at least as of now, because I believe that we could be in for some bit of a resting period over here for larger cap names. From the mid cap end, there's another name which has started to look attractive on the breakout front, and that's Samvadna Motherson. I think at 107 or 108 where it's trading right now, showing signs of an inverted head and shoulder pattern breakout for the stock. So maybe that could be another short-term trade which traders could look out for, say closer to 112, 113 as a target, and stop us at 105.
Interesting. Okay. Rajesh, your picks, I know we haven't had a chance to ask you for those. So you want to give out a couple of names which you like at this point?
So Bandhan Bank has been forming a base on the 200 DMA, and today we are seeing a range breakout. Also, the prices are holding about 89 EMA after a long time. So we are expecting a strong momentum in the Bandhan Bank. So it can be bought with a stop loss of 166 and expecting targets of around 184. The second recommendation I would like to give is Ashok Leyland. The stock had seen a sharp rally, but then we had seen a price correction in the October month. Prices have taken support somewhere around 50 EMA, and some kind of higher bottom structure is happening. Today, the prices are regaining above its 20 EMA, and we expect uptrend to resume. So with a stop loss of 135, Ashok Leyland can be bought, expecting targets of 147.
That's the take on the stocks that you're liking, Rajesh. Arpit, what about you? Some stock-specific picks for our viewers?
So looking at the overall market setup, definitely selective large cap and selective mid caps are outperforming. So first would be from the infra space, L&T. So if you look at the monthly chart structure of L&T, it is given a monthly range breakout after almost 16 to 18 months. A very strong setup on the weekly setup. Though in last 10 hours, we have seen some cool off from the high levels, but the bigger trend is positive, and one can look out from positionally with major support around 3800 for an upside move towards 4000, 4100. Second would be from the NBC space, AB Capital. A stock in clean uptrend on the monthly time frame, gave a range breakout on the weekly scale after 3 weeks above 306 levels. Stock is holding well above 300 levels. So the base of the stock is shifting higher, and we can see new life highs in couple of weeks to months time frame. So one can go long with major support around 297 for an upside move towards 325, 330 plus zones.
Okay, so those are some of the stocks that you're liking at the moment. Just want to revisit some sectors that have been doing very well today. And following IT, of course, it's a day of IT. It's FMCG that's seen a little bit of recovery. But Kunal, Nifty Realty, that was the second highest gainer today, has seen a sharp fall, and it is now one of the losers. It slipped into the red. And you have been bullish on the realty space of late. Your outlook over here?
Yeah, so I think few of the stocks are confirming breakouts. So Prestige, for example, I think is a classical stock over here. Godrej Properties is another chart which has done exceptionally well. For the stocks to come back above their 200 moving averages, even when the sector was trading below the longer term average, or many of the components, large cap names like DLF, they were trading below their long term averages, that tells you that the sector is getting a little bit more diverged, where you're seeing other stocks leading the charge. So I'll still be bullish on those few odd real estate names. I still believe that Prestige and Godrej Properties, even at current levels, they could be good candidates of maybe a hold at current juncture. Yes, the real estate sector could probably have cooled off, but I would still believe that the larger term structure for the entire sector is also much on the bullish side.
Interesting. So that's with regard to realty. I was just pulling out some data with regard to Laurus Labs. Now, obviously, numbers came out, stock hasn't really moved. But you look at the top line number of 1650 odd crore, it's higher by about 10% versus what analysts were penciling in. And I'm talking about the poll of 9 analysts, which is available on Bloomberg. That seems to be suggesting this. Even the EBITDA number of 308.5 crore was the poll number of EBITDA. It's come in at 403 crore, so sharply higher on the EBITDA count as well. And then you're looking at earnings, of course, as a result of that. Your net income, which is your profitability, was higher by nearly 30% as a result. So it's a very, very good set of numbers. Stock perked up 1.5% in trade, 24.5% on the margin count, which is expected to go up by just about 700 bips on a year-on-year basis. But from 14.5, it's gone to 24.5%. So that's a solid 10% increase in terms of margins, of course. So Laurus Labs surely on your radar, or ought to be. Sudeep, if I can ask you and venture a question, how best would you play the tariff trade? The fact that TACO, which is Trump always chickens out, will likely play out in this context as well. And maybe something as early as November, where the risk reward is favorable. If at all you would play it, how would you play it?
Well, if I have to really play the taco trade, Harsha, I think I will go and buy some of these Gokuldas Export and Wellspun leaving kind of stock. They have been the worst hit companies with the tariff in US. But I think if there is actually a taco happening, I think they will benefit the most. So if I have to play that trade, I need to buy these stocks. Also, I must mention that fundamentally these stocks have been doing well. The UK FTA implementation will definitely help them. EU FTA is being talked about, and that should help them again going forward. So I think things were going good for them, except for this entire US fiasco. Now, if this US thing gets resolved, I think it's going to be a good time for them. And the 15% tariff between India and US, which is being talked about, if that becomes a reality, they will be better off compared to some of the neighboring countries where the tariffs are slightly higher. So they definitely are going to be beneficiaries. But I will add a word of caution that I think we have seen too much of volatility with the Trump administration's action. So it's always better to be careful. But if you are a little aggressive investor, want to play the trade, go and buy Wellspun Living, Gokuldas Export. I think you should do well.
Wellspun Living, Gokuldas Export. You want to buy those if you want to follow Sudeep, especially on the taco trade. Now, let's talk about a little bit also about some of the smaller lenders. And, some of these names have done extraordinarily well. Let's pull up an DCB Bank. Let's pull up an AU Small Finance Bank. Let's pull up a Yes Bank. Now, before I go and ask maybe a fundamental question, let me ask Arpit with regard to charts. Arpit, anything you're liking in this space? Is this trade more or less done, or is there still more steam left in this trade? Give us a sense.
If we see overall, talking about the mid-cap banking space, if you look at the overall chart structure, which definitely last couple of weeks has been the outperformance seen in particularly mid-cap banking space. So if you look at the chart structure of AU Small or particularly Federal Bank. So if I look at the chart setup of Federal Bank, so it has given a classical pour and flag breakout on the monthly scale after almost 15 months above 215 levels. And look at the setup wise, definitely the banking sector is likely to outperform here on, as this is the first index to hit life highs. And I think the mid-cap banks are likely to attract attraction within the private space as well as from the PSU space. So from the private space, Federal Bank would be a preferred pick. Positionally looks good from 10 to 15% in next couple of months time frame. Along with the private banks, the second would be from the PSU space, and that is pick would be Canara Bank. So if you look at the chart setup of Can Bank also, it is on the verge of its major breakout on the monthly setup above 128, 130 levels, and PSU sector is back to its life highs. So definitely from here on, we can expect good upside move towards 135, 145 levels. So I think mid-cap space banks would be the outperformance that can be seen. Fed Bank and Canara Bank would be a preferred pick within this space.
Banking, PSU, mid-small, would it be the large cap banks? How would you play it? Rajesh?
This was okay. So yeah, we have the same view. We are very bullish on the PSU banking space, and as highlighted, Canara Bank is our preferred pick. We have also recommended in our Diwali recommendations. So quite bullish on the Canara Bank, and from the mid-size private banks, Bandhan Bank looks good as already highlighted. The stock is forming a base around its 200 DMA, and some kind of reversal is there. So possibly the stock can move from here towards 182 to 185 levels. So Bandhan Bank can be bought from a short term as well as a medium term point of view, and Canara Bank as well.
Well, we've taken Kunal's views plenty of times now with regard to banks, so I won't come to you on banks. But Sudeep, do you have an opinion from a fundamental perspective within the banking space? What are your favorites, and how best would you play lenders at this point?
Well, I do like the PSU banks. Generally, I think there is a valuation comfort still there. If I have to play really safe, I'll go and buy State Bank of India, even at current level. I believe there is still opportunity if you're a long-term investor there. But if I want to be a little aggressive, I will go and buy some of the mid and small cap PSU banks. And the Central Bank of India has been drawing our attention. I think valuation-wise, it is really available at an attractive valuation. There is a talk of consolidation once again as far as PSU banks are concerned. And probably at some stage, some of these consolidations will be happening, and some of these smaller banks, which are quoting at significant discount to their book value, should definitely benefit. So, investors with risk appetite should buy some of these smaller PSU banks. As far as non-bank lenders are concerned, I think the view has been veering around gold loan companies, and I completely agree on that. I think the gold loan business is doing definitely well, but I'll rather investors focus on some of the banks which have become aggressive on gold loans, and Federal Bank attracts our attention. They have been doing otherwise also well. There is some fundraising planned, which probably we will get to know very soon. But beyond all that, I think the gold loan business of Federal Bank is doing well, and they have significant opportunity for scaling up that business. So I will look at Federal Bank from a gold loan perspective as well.
What about gold loans, Kunal? We've not taken your view on Muthoot Manappuram.
Yeah, so I think Muthoot is the most stronger one over here out of the two, and
Yes.
I think maybe that stock could be something which could be looked at current levels of 31.50 thereabouts. But I think as compared to Manappuram Finance is the other stock which is a tad bit more volatile. Has underperformed. Muthoot Finance, I think, if I'm not wrong, on a somewhat basis, also I think the stock had done some 70% plus returns.
Yes.
So more or less like how the gold, as an asset class has performed. Manappuram Finance, I think, has underperformed in that sense. So I think if I have to take a trade, Muthoot will be the preferred bet.
Okay. Last question. Force Motors and SML Isuzu, Kunal. These two are names which have done phenomenally well. Some bit of cool off that I see on Force Motors on charts today, 6% down. Quick view, 30 seconds.
So I would still suggest that it's a good buy on dips for both of these stocks, SML Isuzu as well as Force Motors. After a stupendous rally which these stocks have shown for a good part of this calendar year, I believe that it's a good zone where these stocks have